our e-poster for our graduation project. We worked for this project for 6 months for our semester. Our project is about the effect of creative accounting on the firm's performance. Starting with our abstract, this study aims to find out the effect of creative accounting in which the intentional manipulation or omissions of amount or disclosure in the financial statement has a significant effect on the firm's performance in Egypt. And to detect the effect of misreporting of assets and equity have a significant effect on attracting investors or minimizing taxes or not. The findings reveal that creative accounting has a significant positive effect on firm performance measured by ROA and an insignificant positive effect on ROE and topping Q. And for the meaning of creative accounting, it is used to change the reported facts while staying within the confines of accounting regulations and law, so they reflect what management wants to tell stakeholders rather than the company's genuine performance or position. It occurs because of management discretion in selecting accounting rules, reducing financial statements to make the company appear more successful to attract investors or appear less profitable in order to avoid paying taxes. The financial statement has been regarded as a critical component of a successful corporate governance system. And it is usually carried out by a firm that has reached an unstable condition and has begun to use creative accounting techniques to fraudulently inflate earnings and therefore hide the financial crisis. This approach can lead to tax avoidance and the loss of hard-earned money for the investors, with a request from the company's board of directors to falsify the company's financial statements in hopes of disguising losses as it aids in pricing manipulation, profit overstatement, income smoothing, and account falsification. By certainly questionable stewards, the financial statement became useless. For our methodology, this study examines the effect of creative accounting on firm performance. Secondary data were obtained using financial statements of the Egyptian Stock Exchange. Population of this study comprised of all industries, excluding banks and non-banking financial institutions, while the sample of the study was made up of 147 companies of the most active companies in the Egyptian Stock Exchange. These data were obtained from 2013 to 2018. Our dependent variable are firm financial performance measured by ROA and ROE, and firm value measured by topping Q. Our independent variable is creative accounting, which we measure using the following model. And for the control variable, firm size, which is the total assets, and financial leverage, which is measured by total liabilities over total assets. We measured the effect of creative accounting on firm performance by the following 3 models. And these models test our hypothesis. First hypothesis is creative accounting has a significant relationship with firm financial performance measured by ROE. And hypothesis 2, creative accounting has a significant relationship with firm financial performance measured by ROA. Hypothesis 3, creative accounting has a significant relationship with firm value by topping Q. The findings show that in model 1 ROE, the dependent showed significance with TAC and leverage, with size showed significance. The dependent showed significance with TAC and leverage, and insignificance with size. Regression showed an insignificant relationship for the model, and which resulted in rejecting our first hypothesis. Model 2 ROA has shown that there is a significant relationship between ROA and TAC. The regression results showed significance for the model with 0.4, which means that 40% of the variance in ROA will be explained by TAC and control variables. That is due to 60% other factors. This means accepting our second hypothesis. Our last model, model 3, topping Q, showed an insignificant relationship that resulted in rejecting our last hypothesis. This study proves that there is a significant relationship between creative accounting and firm performance measured by model 2 ROA, and the smaller the size of the company, the higher the use of creative accounting activities occurs, because bigger sized companies have auditors and Big Fours reviewing their financial statements. This study provides recommendations that can be used for future research to expand the research population into banks and non-banking financial institutions. Thank you.